friends, welcome to the financial accounting class. Today we'll discuss the introduction to rules of double entry system. So what is financial accounting? According to American Institute of Certified Public Accountants, it is the art of recording. That means noting down in the books of journal entries where we generally write the day-to-day transactions. Then classifying. Classifying is the posting of journal entries into the appropriate ledger books. That is, the sales account will be posted into the sales ledger. The purchases account will be posted into the purchases ledger. Then the last stage is summarizing, where we generally prepare the trial balance and financial accounting, through which we can ascertain the profit and loss and financial status of an organization. These all can be written only in the money transactions. The one which are not dealt with the money are avoided in the financial accounting. Example like kindness. Kindness shown to someone, we cannot note it down in the financial accounting. Then moving to the system of accounting, there are two systems of accounting. The first one is single entry system, under which we only write the personal accounts. We avoid writing the real and nominal accounts. That is the reason we consider this as not a complete record of a business transaction, as we avoid writing the trial balance and financial accounts, which cannot be prepared using only the personal accounts here. Generally, the small business only adopt this type of system. The next one is the double entry system. This is accepted worldwide, and it means that for every business transaction there will be two accounts. See, suppose I'm giving you something, you'll be giving me something. That means I'm getting something back. There will be something to give and something to receive. There will be two entries, and those two entries will be written in those books of entries. That is the reason it is called as a double entry system. Suppose I'm purchasing some goods. I'll only purchase goods by paying cash, right? That means cash is going outside and the goods are coming inside. So this is considered as an example. And similarly, in credit sale of goods, goods are given to the customer, where the customer becomes the debtor of that particular transaction if he doesn't pay the money. Then, what are the rules of double entry system? There is a separate rule for separate transactions. We'll discuss one by one. The first one is the personal accounts. What is personal accounts? So it means the names of a particular person or a firm. How can we identify a person? By calling its name, like Ramesh, Suresh, Ram, Rahim, etc. Right? All these comes under the personal account. Then the real accounts. Real accounts are the assets of an organization. Then the nominal accounts deal with all the expenses, incomes, profits and losses. See, example. In the first example, the John purchased a machinery from Krishna. The John, Krishna are the personal accounts. They are the names of a particular person, right? So they are the personal accounts. Whereas machinery is an asset of a company, right? So machinery is considered as a real account, and when purchases is also a real account. See, suppose we purchase goods, so purchased goods, so goods are coming inside, so we consider purchases as a real account. In the second example, Mr. X paid commission to Mr. Y. So by this time you understood that Mr. X and Mr. Y are personal accounts and commission is an nominal account, as it is an income to the organization or to Mr. Y. The next one is the rules of personal account. So what is, as I said, the personal account deals with the personals particularly. So the debit, the receiver, the one who receives will post him under the debit account. Then the credit, the giver, the one who gives something will be posted under the credit. Example, Ram buys goods from Rahim. So who is actually giving here? Yes, Rahim is giving the goods to Ram. Ram is taking goods from Rahim. So Rahim will be the giver and Ram will be the receiver. The next rules to the real account, debit what comes in. That means whatever comes inside an organization, whatever comes in to the organization will fall under the debit column, and whatever goes from the organization, whatever goes out, will be posted under the credit side. Example, if a machinery is purchased for a cash, then machinery is coming into the organization, whereas cash is going from the business, right? So we make machinery as debit and cash as credit. Then under nominal account, all expenses and losses will be posted for debit, and all incomes and gains will be posted for credit. Example, if a rent paid to landlord, then rent is going outside from an organization, right? Rent is an expense. Rent is a loss. Rent is an expense to the organization. So rent will be debited. Similarly, if we receive a salary or a commission, that will be an income to us, right? So that will be posted under the credit side. Then there are certain exercises for you. You please try out these. What falls under what? Like suppose you need to classify all these 10 into the personal, real or nominal. I'll do first one for you. The purchases. Purchases will fall under the real account. So, second one. The answers were given in the next slide. So you be thorough with the rules, as it is important. If you get those rules, you can be the masters in the journal entries. Thank you guys.